Hello, everyone. Dr. Chris Martenson here. We've got a very quick, short, but very important report for you about the banks, the banking systems, things blowing up. As you may or may not know, I spend my time analyzing all kinds of things. COVID was one thing, but I analyze financial markets, energy markets, things like that too. So if you like your analysis, come on by peakprosperity.com where you can hear everything I'm talking about all the time. This is a critical moment. Why? Because it's kind of like 2008 all over again. We got to talk about this. Do we have a financial crisis brewing right now? Oh yeah, we do. It's a little different than 2008. That was an actual bankruptcy crisis. This is a self-inflicted harm and crisis courtesy of the Federal Reserve. We'll get there. So let's see. Let's go here. Start here. So yesterday, or just this morning, it was announced, because this is March 16th. You can see down here when I get my drawn tool out, we see that March 16th is today when I'm recording this. 11 big banks decided to deposit $30 billion into First Republic Bank. It's a regional bank in the United States, reasonably sized. First Republic Bank, there's a picture of a branch of it. Check this out. The biggest banks in the U.S., they swooped in to rescue First Republic Bank with a flood of cash totaling $30 billion. And they just were like ordinary depositors, like same rates that would apply, no special deals. They didn't have any equity, nothing like that. They just put $30 billion of liquidity deposits straight into First Republic Bank. The bank's executives, they say here, came together in recent days to formulate the plan, discussing it with Treasury Secretary Janet Yellen, who, by the way, was an absolute monetary vandal during her unfortunate tenure at the Federal Reserve and is doing a spectacularly bad job of instilling confidence or hope in myself and many other observers. She is just not up to the task. I don't know what's going on with her, but she is not inspiring confidence. But this was confidence, right? $30 billion put into First Republic Bank. You know what's going to happen next, right? Sigh of relief. This is a big show of support. All is well. Or is it? This is this morning's stock price action for First Republic Bank, down another whopping 24%. This is no bueno. This is very bad. It's down a lot here. So here we see coming through, it had this big drop, a little bit up, and it's just having a big old drop here again today. Look where it started a while back here. It's $25 here. It was over at about $120 back here at the beginning of the year. This is not a good sign. This contagion is spreading. So even we see here, this contagion is not confined to the regional banks. We're seeing reasonable price percentage declines here in JP Morgan, Wells Fargo, Goldman Sachs. I'm going to skip one here, Citigroup, and even Toronto Dominion. These are the biggest of the bigs. But look here, Credit Suisse, hanging on for dear life in the U.S. markets. They are defending that $2 share price with everything they have. They have to defend it. Somebody's throwing money at this to try and defend an arbitrary line in the sand, which we'll call $2 here. It's bouncing around there for a while. It fell below that a couple days ago, but Credit Suisse is cooked, completely cooked. Now, put this all in context. That's just one day's action in the bank saying things are not yet fixed. What do we see when we look longer term over the course of a year? Just picking one representative example, Bank of America, BAC here, starting a year ago. So you see here, this is a one-year chart. That's why that is highlighted in yellow right there. It started back here at $43.73 per share back in March of 22. And here in March of 23, we're at $27.73. That is a decline of 36% over the year. So this isn't a recent decline. This is something that's been going on for a while, and it's now hitting, this is getting bad. And I'll tell you why. You want to know why this is bad? So people are like, gosh, does this fix it? Does it fix it if we can, let me scoot back up here. We'll throw $30 billion in here. Credit Suisse, what did they do? They had, they got a line of credit for $54 billion from the Swiss National Bank. And Genevieve Roque-Dichter here put it well, saying Credit Suisse, a bank that lost $7.8 billion last year, is being rescued by a bank that lost $143 billion last year. That, of course, is the Swiss National Bank, posting a record loss. The banks are all hemorrhaging. They are losing money really badly. Credit Suisse is a disaster scene right now. This is a train wreck right here. This is an East Palestine Palestine, I guess they pronounce it there. Look at this. Credit Suisse back here in 2006. All is well, hitting new highs here. And then, just a bump, little speed bump here. Fixed. Oh, that was fixed. Oh, no. We fixed it this time with each one of these little rescues that was engineered here. And now we're at the OS moment down here. So that's Credit Suisse being rescued to the tune of a $54 billion loan from a bank that just got its clock cleaned because the Swiss National Bank is not a national bank anymore. It's really a long-only hedge fund. And I can't even call it a hedge because they don't hedge. They went long U.S. equities and things in the NASDAQ in particular. So in order to understand why this is a crime scene and why this is all completely bent, we have to return to Jon Stewart Mill, who wrote back in I think this quote comes from around 1850 or so. This is a really important quote. He said, "Panics, such as the one we're in right now, do not destroy capital. They merely reveal the extent to which it has been previously destroyed or has previously been destroyed by its betrayal in hopelessly unproductive works." End quote. Hopelessly betrayed. The capital that's about to blow up right now, what we're seeing in the markets has nothing to do with a couple of banks making a couple of bad decisions here and there. That happens. They go under. It's no big deal. This is a big deal because this is a system-wide problem. Why is it a system-wide problem? If I could have everybody just reflect on one chart and one chart only that would sort of explain everything. If you wanted to just meditate on one chart, it would be this one. This is the crime scene right here. This is the Federal Reserve's what's called the federal funds rate. So when they raise interest rates or lower interest rates, this is what everything keys off of, this rate. The Federal Reserve is a group of unelected officials who basically sit there and make up decisions that affect all of us. And in fact, it affects generations. In fact, the Federal Reserve picks winners and they pick losers. And this generation, the boomers win, but the millennials, sorry for your household formation, you lose, right? Because each one of these things, what we see here is the Federal Reserve back here in 1990, lurching this way and then lurching this way. But look still at the volatility you see in those interest rates that are being set there. See that, the sort of jumpiness in that red line? And then all of a sudden, starting here under Bernanke, the Federal Reserve got really interventionist and they drove interest rates down here to this 1% blowout rate that gave us the first housing bubble. And then they started raising rates into that housing bubble until it burst. And then the emergency panicked and brought us down to this basically 0% rate down here in yellow across this period from 2009 through about 2016. And then they started hiking rates again, and everything blew up here in 2019 with what's called a repo crisis. And then again, they immediately cut down to zero this time, literal zero. And now here they are raising again. These moments right here, I'll put this in red. These moments here, here, and here. This is where the capital got hopelessly betrayed. These are the crime scenes right here, okay? This is a crime scene. Money should never cost zero. This is a crime scene down here, right? In this period of time in here, we actually had $19 trillion of negative yielding debt. If that confuses you, it should, because negative yielding debt is something that can only happen with interventionist central banks coming in and screwing up money so badly that you have to pay me for the right to loan me money. That's what a negative yielding interest rate is. You are paying me to loan me money. You have to pay Germany for the right to lend Germany some money for a few years, right? That's obviously what a disaster. That's under Yellen, by the way. She is a complete monetary vandal. So this is a very big deal. This is the crime scene. By the way, down here, in these moments where we had all these negative yielding rates and we had all this stuff down in this zone down here and in here, this is when capital got hopelessly betrayed, because it's those moments when money is yielding zero, people do stupid things. Now we're finding out the banks did some stupid things, and the banks, their whole job is to deal with money and manage risk around money. They don't have anything else. They don't have to manage geological risk. They don't have to manage labor risk. They don't have to manage supply chains. All they have to do is manage money so that it doesn't go tits up for no good reason. Of course, they failed at that. Banks do that because they have moral hazard. They're poorly regulated. Lots of things happen, but it's almost impossible to make good decisions around money when it's yielding 0%. This is a bad deal right here, right? So when we look at this, this is the crime scene. All that period of time from 2009 through 2016, and then again from 2020 to 2022, those are eras where the capital has already been hopelessly betrayed. Bad decisions were made. Things were invested in that shouldn't have been invested in. Things weren't invested in that should have been invested in. That already happened. The panic that we're about to go into, that we're entering right now, is just going to reveal the extent to which all those really terrible decisions got made. Okay? Go woke, go broke. We have all this money. SNB, Silicon Valley Bank, SVB, I'm sorry, they put money, $73 million into Black Lives Matter. Like, woo! We had Sam Bankman-Fried and the very oddly not prosecuted blow up with FTX, and on and on and on. These are the things that happen during the heady era of 0% free money, and bad decisions get made. Those are about to be revealed. So no, this isn't a bankruptcy crisis around people having overstretched for houses they couldn't afford. This is the sum total of a big, nasty pile of really poor decisions that were made that are now being exposed. And no, it doesn't help to have some banks putting a little more money with other banks. The whole system is in trouble. So that's what I wanted to communicate with you. If you like this kind of thinking, this kind of analysis, we're going deep on this all day long, every day at peakprosperity.com. With my members, you'll have to come and become a member if you want to hear more about what I think about all this and how, more importantly, we're managing. What do you do? What are the strategies you do when this kind of a world is the world that we now live in? So come on by Peak Prosperity. Check that out. If you want to understand the larger context of all this, buy my latest book called The Crash Course Revised Edition. It explains the larger tapestry for why there's nothing that can be done to rescue this at this point in time. The only question that's to be resolved is who is going to eat the losses. Naturally, the banks want that to be you. I want it not to be you. So that's where we part ways on all of this. So with all of that said, thank you very much for listening. We will be back with you next time. Come by Peak Prosperity if you want to follow more analysis like this. Bye-bye.
The beauty of saying it's an emergency is very difficult to challenge any of this stuff.
Our wealth is being stolen via our money.
I would have never come here if I thought it was lost. I know we can